You're listening to Uranium Spotlight Podcast, sponsored by PurePoint Uranium Group. If you're following this market closely, you'll want to explore Behind the Curve, understanding when and how the uranium market turns, a new white paper that shows investors how to spot the cues that come before uranium prices move. And now, your host, Chris Frostad.
It's December 16th, 2025, and this week on Uranium Spotlight, uranium prices rise quietly. Japan edges closer to a nuclear restart consensus. India moves to open its nuclear reactor sector. And ATHA Energy delivers one of the most compelling uranium discovery stories of the year. The uranium spot price moved higher last week, opening at $75.85 a pound U3O8 and closing at $77. This was not a week defined by heavy trading or headline deals. Instead, the price move reflected a steady firming of sentiment, with sellers remaining disciplined and buyers showing continued interest at higher levels. Volumes were modest, but the lack of downside pressure was notable. The long-term price remained unchanged, reinforcing the idea that utilities continue to view current pricing as acceptable for securing future supply, even as they remain selective about timing and contract structure. The market continues to show a clear split between spot price signals and longer-term contracting behavior. Importantly, this price strength came without a single major catalyst. There were no large fund purchases and no visible supply shocks. That matters because it suggests the market is now supported by structure rather than speculation. Producers continue to prioritize existing commitments over discretionary spot sales, and utilities remain cautious about relying on spot availability alone. This dynamic keeps the spot market thin, meaning even small amounts of buying can move prices higher. For investors, the key takeaway is that uranium prices are rising without excitement, which is often how stronger trends begin. The steady price behavior we're seeing now is one of the cues discussed in Behind the Curve, the white paper that shows investors how to recognize when uranium's real move is about to start. Get it now at uraniumspotlight.com. A new public opinion poll released last week shows that support for restarting nuclear power plants in Japan remains solid, even as undecided voters now make up a large share of the population. About 44% of respondents said they support restarting reactors, while 26% oppose current plans. The remaining group said they were unsure. Support was strongest among voters aligned with the ruling Liberal Democratic Party, which holds a majority in Japan's lower house of parliament. Compared with a similar poll from 2022, both supporters and opponents have declined slightly, while the number of undecided voters has increased. This shift likely reflects two forces working at the same time. Energy prices have eased since the shock of 2022, reducing urgency while memories of Fukushima continue to fade. Even so, the direction of travel remains clear. Japan is restarting more reactors than at any point since the accident, and discussion has begun around building new reactor capacity for the first time in over a decade. Japan still generates more than 80% of its electricity from fossil fuels, and alternatives such as wind and solar face real limits. Nuclear remains the only scalable source of clean baseload power available to the country. For investors, this matters because Japanese restarts are no longer theoretical. Fuel requirements move from planning into physical demand once reactors restart, tightening an already constrained uranium pipeline. India made two important nuclear policy moves last week, both pointing to much higher long-term uranium demand. First, the government introduced a new bill to Parliament that would replace two older nuclear laws with a single modern framework. The new legislation would allow private companies, including joint ventures, to build and operate nuclear facilities for the first time, while the state retains control over sensitive activities like enrichment and used fuel management. The government described the bill as a way to modernize nuclear governance, support clean energy goals, and provide reliable power for future needs such as data centers. India currently operates 24 nuclear reactors, with 8 under construction and 10 more in early planning stages. This first wave alone would increase uranium demand from roughly 10 million pounds a year today to about 18 million pounds annually. But India's long-term ambition is far larger. Government targets call for roughly 9 times current nuclear capacity by 2047. At the same time, India has acknowledged a major constraint. Domestic uranium production covers only about 40% of current demand, and known reserves are costly to develop. As a result, India already relies heavily on imports. In a second move last week, the government instructed its Atomic Minerals Agency to accelerate uranium exploration, both domestically and potentially abroad. For investors, the message is clear. India is preparing for a future where nuclear power plays a central role, and that future requires far more uranium than the country can currently produce. ATHA Energy released 2 sets of drill results over the past few weeks that together outline a major emerging uranium system at its Angalak project in Nunavut. The story centers on the mineralized Rib corridor, a 12-kilometer structural trend identified using modern geophysical modeling. During the 2025 drill program, ATHA tested multiple targets along this corridor and intersected uranium mineralization in every hole drilled. The standout result came from the Rib North discovery. The maiden drill hole intersected 34.7 meters of total uranium mineralization across several zones, including higher grade intervals of up to 8.16% U3O8 over half a meter. Mineralization spans sandstone, unconformity, and basement styles, closely resembling systems seen in the Athabasca Basin. Follow-up drilling confirmed that this was not an isolated result. At Rib East, 8 drill holes over a 750-meter strike length intersected uranium, including grades of up to 5.55% U3O8. At Rib West, mineralization was intersected across more than 2 kilometers of strike. A first hole at Rib South also returned uranium with large areas still untested. What makes this story compelling is scale. The corridor remains open in all directions, and the current drilling is constrained only by the limits of existing geophysical coverage. Additional surveys are planned for 2026 to expand target definition across the broader basin. Management emphasized that since acquiring Angalak in 2024, the company has now drilled 46 holes, with uranium intersected in 45 of them. That level of consistency points to a large mineralizing system rather than isolated showings. For investors, the takeaway is this. ATHA has demonstrated district-scale potential with multiple discoveries along a single structural corridor. Results like these can shift a project from exploration success to strategic relevance, especially in the tightening uranium market.
Before we wrap up, if you haven't yet read Behind the Curve, Understanding When and How the Uranium Market Turns, it's worth your time. It explains the real signals that reveal when uranium prices are about to move, long before the headlines catch up. Order your Behind the Curve white paper at www.uraniumspotlight.com. You've been listening to Uranium Spotlight, your weekly podcast dedicated to the latest developments shaping the uranium fuel market and its role in the global energy landscape, sponsored by PurePoint Uranium Group. While our passion for this sector is undeniable, remember that nothing discussed here should be taken as investment advice. Our goal is to provide a clear and balanced view of the factors influencing uranium prices. Join us again next Tuesday for Uranium Spotlight.